Yo, what's up, guys? This is Splat. This is my video on supply and demand on a trade recap that I took. So what I traded on August 17th was Apple. All right. So you guys are probably asking, how did I even get this demand, right? So we made this ginormous move up, right? We pulled back, we consolidated in this area. Before this rally that we pushed high for new highs, this is the last candle, right? This is an order block right here, essentially. And moves like these cannot be made as from retail. Like, so these moves are coming from institutions, hedge funds, big money, right? Retail traders can't make this move. So the way I like to draw my supply and demand, in this case demand, is I get the top of the body for demand, bottom of the wick. Vice versa for supply. So if I wanted to draw a supply area, it would be the bottom of the body and top of the wick. All right. So you guys must be asking, like, what did I see to take this trade, right? So we have this big demand area right here, right? We make this move, whatever, end of day closes. Market opens up next day. Hold up, let me drop down for the 5 minute for you guys here. So market opens up, right? We see a lot of selling pressure, right? This 5 minute candle is ginormous. Lots of volume, lots of volatility. And people are scared. They're thinking, what if this zone gets invalidated, right? What if we just knife through that zone? You gotta have confidence in your play. You have to make sure that everything is lining up, right? So how did I do that? You guys must ask. Like, what gave me more confirmation just off of this zone? So I entered right here at the touch of this 173.35 right here, right? And my risk, I was barely risking anything. I was risking 7 cents, guys. That's nothing. That's like maybe 3%, 2%, or like 5%, right? You're barely risking anything. Your risk to reward on this is ginormous, right? Because our swing highs are not necessarily swing highs. We have our targets at 173.70, 173.93, right? So your risk to reward, let's see, we can do that right now. 7 cents to 40 cents, right? That's almost a 6R. Almost a 6R multiple. These are the type of trades you guys want to be taking, right? So I entered right here, right? And I saw time and sales, right? And I was seeing orders filling in, right? So I took my starter, and my stop would have been a candle close above this, but we got pushed back up, and I saw time and sales, and I also got time frame continuity once this candle opened up, right? So everything was lining up. So once we came up here, I added my full position at this area, right? And we get this nice big move, right? This gave me around 25%, and I was done for the day. I called it, right? But you guys must be asking, like, how would you play this zone again? What if it came back down again? Like, would it still work? Would it still be valid? The answer is yes. So another way you could play it is we make this move, right? We make a ginormous move down, and people are like, they're nervous, right? They see the ginormous sell off. They're like, what if it just breaks through? You take another position here, right? And we bounce straight up off of it like this. Right? You don't want to get liquidated. What does that mean? See how we went all the way below this demand, right? We hit 173.12. That's a big move. So you'd want to wait for that candle to close. You don't want to be part of that liquidation. You want to stay in your position. You can't get shaken out, all right? So we're in this position. We make a nice move up again. And the way I use demand levels is that after it wicks off that demand level 4 or 5 times, I tend to erase it. Why, you may ask, is because once orders start getting filled from big money, right? Um, that demand becomes weaker because there's not that many orders sitting there. So we hit this first wick, we caught this move, right? We made 20%. You could have played this right here, right here, right here. You had 4 opportunities to play this, and we made nice moves off of every single one. So if we ever come back down here, right, I'd be a little bit more cautious now that we wicked off of it 4 or 5 times. The best probability high profitable high percentage chance of a trade going your way is off those fresh zones. Sorry, is off those fresh zones. You want brand new fresh zones that have not been tested 1 or 2 times. They're still valid, but once we get to around 4 or 5, I tend to stay away from those. So if we ever come back down here, I'd have this would be another area of interest. Or if we come back down here, right, we can draw a supply area right here. From like we get, like I said, last candle before a big move down, we get bottom of the body, top of the wick. See, on this trade right here, I don't know if I would take it though. Why? Is because you're risking a lot, although you have a big, there's nothing stopping you going to this low right here. You, it's not the R multiple that you want, right? You're risking $1 to make, what, 55 cents? That's not an ideal setup. This is an ideal setup. You're risking 7 cents. You're risking 7 cents to make 40 cents. That's almost a 6R multiple, right? So these are the types of setups that you want to look at. You want to look for your risk to reward because you don't even have to, you can be you can be right only half the amount of times, but you can still be profitable. You know what I'm saying? So it's all about those risk to rewards that you take. And I'll also be uploading another trade recap that I took on August 18th. Today's August 18th on SPY. So stay tuned for that.